Welcome to the THD Weekly Update for January 7, 2013. I will cover the S&P 500, COMEX, and the Dow Jones. On this screen, the S&P monthly, weekly, and daily charts. The monthly chart, which is the chart far on your left of the screen, you can see inside the blue box that price has been range bound for basically 2010 until about now. In that range position has been supported by flat RSI levels as well as a low than average ADX value at the moment. This chart at this moment is not showing sign of moving anywhere. Only volume comes back into this market and RSI and ADX are climbing. I think this position will continue to be until the smaller time frame start to moving to a higher or lower grounds. When we look into the monthly on the weekly chart, you can see that last week bar, which was due to or mainly because of the fiscal cliff resolution, created a move to the upside. Now, this bar is already propelled by increasing RSI and obviously increasing ADX. It's showing some potential. However, when you look at the daily chart, you can see that this long bar created a divergence on the daily chart. This divergence will definitely cause price to retest somewhere around here, either at the moving average or at the ATR, before either moving up or continue going sideways or down. We will need to see a resolution on this chart to see what the market will do. This is the biggest scope of the chart. If price decides to break this resistance level of 1474.51 and volumes comes back and into this market, you can see price moving to a higher ground. And the next resistance or significant resistance is located around 1576.09. And again, for this to happen, volume needs to come back in. Blue volume or buying volume needs to come back into this market. And again, it is early to predict. When we move into the monthly, weekly, and daily chart of the COMEX, you're going to find similar situations than the S&P charts. You can see that on the monthly chart, price has been more or less range bound. The RSI has been flat for the last year or so, more or less. And the NDX has been definitely lower than what we like to see. Right now it's around 1785. For this market to move up, volume needs to come back aggressively here and start pulling price to a higher ground. I like to point out that on the monthly chart that this grind represents a previous high of 31.8693. Price is testing this resistance area, and if it should break it, could go as high as 51.3252, which is a prior high that it achieved more than 10 years ago. When you look on the weekly chart, you can see the blue bar propelled by the buyers who came into the market, creating obviously this upside reaction to this bar. However, when you look on the daily chart, you can see that again, like the S&P 500 chart, that this bar created a divergence on the daily chart, and very likely you will see price either testing the moving average or the ATR. And at this point, we have no more information to offer. We gotta wait and see what the market will do on the short term before evaluating what direction it decides to go. But definitely, we are in a divergence mode at the moment. When you look into the Dow Jones monthly and weekly and the daily chart, also you can see a very common element as the other two charts that I presented before, or the other two markets that I presented before. You have the monthly chart more or less consolidating, range bound. The weekly also similar position. And on the daily, you see definitely another case of divergence. So this last week activity in all three different indices created a price to move up on the midterm charts. However, on the short-term charts, in this case the daily, you're creating a divergence. So price should be pulling back down in all of these three markets in the short term. Here's the daily chart of the Dow Jones. Now, if price decides to break this 13,661 range, it could come back as high as 14,198.10. But again, for this to happen, volume needs to come back in. Buying volume needs to come back into this market and sustain this trend on the upside. So we need to see an RSI increasing and obviously ADAs moving on this side to hold his trend. Remember, make sure to wait for the market settles around 10 a.m. to 10:15 a.m. before entering a position, either a swing or position trades. Make sure that there is no significant market reports coming up that could affect your trades. Exercise proper money management. And more important, I would recommend each of you to visit the THD website and register for a seminar and learn how to use our tools. See you next week.